Hi everyone, so here is my holding on 4 big stocks that I own in my portfolio, and if you aggregate the numbers, you will see that my investment amount is huge. On the flip side, this is the car that I drive, it's a Tata Nexon. So I naturally get asked a question that Akshat, you have a lot of money, a lot of wealth, this, that. So why are you driving a basic car? The short answer is that it is a part of my retirement planning, living frugally, spending less, being sensible about it, being practical about it is the core tenet on which I operate. Basically, my viewpoint is that I would rather have a lot of flexibility in my life, not stress about money, live wherever I want to live. For example, right now I'm in South Goa. I keep on traveling here and there. Peaceful environment hai, weather hai acha, right? And all that stuff. So I prefer this flexibility. So this is a practical insight that I've discovered right from the time I had a corporate job. Ki yaar, sensibly, I have to save and invest. And I have to keep my lifestyle inflation in check in order to achieve early financial independence / retirement. So on this video, I'm going to share with you practical insights, practical strategies that I have personally used in order to achieve early financial independence. After watching this entire video, you will get a very clear idea aapne kya karna hai, what is it that you should be doing, what is it that you should not be doing. Because most of the people that I see who are interested in getting early financial independence / retirement, they just keep on doing Excel all day, right? Ki Excel humne itna invest kar liya, so we will become like retired in like this amount of time. No, all this will not help. You will study the math also. So first and foremost, please like this video so that these type of fundamentally researched video reach out to more people. I speak from life and practical experiences, whatever I have personally done. Kitabhi baatein nahi hongi. Second key point is please watch this video till the very end. It's a very humble request. I will condense a lot of interesting insights for you in a very short span of time. Watch it till the very end. You will not need to watch any other retirement oriented video. All practical points will be spoken about. So on that note, let me share a very broad framework, and the rule is called as 90-9-1 rule. Now what is the meaning of the rule? So here is the snippet. Take a look at this. This rule is applicable across a wide range of industries. Let's pick the example of internet. What you will observe is the fact that 90% of people waste their time on internet, scrolling में लगे रहेंगे and दुनिया भर की चीज़ें, right? And we'll scroll all day, we'll just watch like shorts after shorts after shorts, learn nothing, do nothing. So 90% people on the internet waste time. 9% of the people use internet intelligently, probably to gain knowledge, learn something new, upskill themselves, do good things, probably watch my channel, subscribe to my channel and like this video. And 1% who are at the top of the internet food chain, they are the one using internet to make a lot of money and turn it into a profession. So this split of 90, 9 and 1 is applicable across a bunch of industries, and it is also applicable in terms of investments. लोग सिर्फ एक्सेल करते रह जाते हैं all day long that, you know what, okay, if I save this much amount of money, grow it at like this much rate, then I will be retired in like these many years. That's incorrect. That will not work. You have to have basic principles sorted out. You need to have basic practical wisdom on this topic in order to understand this concept more. Let me give you some math here. For example, let's say that it is the year 2023. You have saved roughly 1 crore rupee right now, and you'll say, yaar, bahut ho gaye paise, right? And now I can retire, just live off by growing my money at like crazy rate, and I'm done. But see, the point is that if you study inflation and the way the inflation is being played out practically in the economy, कि भाई स्कूल की फीस इतनी बढ़ गई है, the cost of raising a kid has gone up like crazy. On top of that, foreign education has become extremely expensive. The inflation there is crazy. So from that perspective, आप तो मान के चलोगे कि, you know what, the rate of inflation in the economy is 5, 6, 7%. But practically the type of services that you might be availing, the inflation there is absolutely mind-boggling. For example, consider health insurance. The premiums on health insurance, term insurance is growing at roughly 14% CAGR, 14% CAGR every single year. So it is critical to avail these type of services as soon as you can. So on that note, let me introduce you the sponsors of today's video, which is Max Life Insurance. Imagine that you're 35 years old and you won a lottery of 10 crore rupees. You will feel, kya, oh, 10 crore rupees. I'm just going to rule the world with it. I'm going to resign from my job, live a retired life, this, that, all good things. But here is the problem, and let me use the math of 1 crore rupee and the value of it after a few years. So 1 crore rupee after 10 years only remains 50 lakhs if you assume a 7% inflation. Similarly, after 15 years, the value will be only 36 lakhs. After 20 years, it will only remain 25 lakhs of buying power at current inflation of roughly 7%. So the point I'm trying to drive home through this example example is very simple that retirement planning is not that easy. दुनिया भर के Excel models बनते हैं and we follow so many things, systematic withdrawal plan, this, that, but it is not easy. Those are not practical things. So retirement planning is an area where I have had some bit of practical experience because I currently live in Goa. I could technically call myself retired. I'll not use the word retired because that has a negative connotation to it, but I would call myself financially independent, that I get to work wherever I want, whenever I want, how much ever I want. So from that perspective, I can call myself semi-retired, so to say. On that note, the very first thing that you absolutely need to do, literally the ABC of retirement planning, is that you need to protect yourself and safeguard your family. And for that, you need to have an insurance. And on that note, let me introduce you to the partners of today's video, which is Max Life Insurance.
They offer the plans at very affordable premiums.
By paying 700 rupees monthly, you can get a life cover of 1 crore rupee. Now, this comprehensive plan comes with a host of advantages/riders. For example, you can get disability cover. You can get protection against 64 critical illnesses. You also get accidental cover, life cover. On top of that, one of the key components that you need to remember while buying an insurance is the
Claim settlement ratio,
which simply means that if an insurance organization is getting 100 requests for processing claims, how many claims are they actually processing out of it?
Max Life has a claim settlement ratio of 99.51%, which is good.
Max Life also offers free cost of term plans with special exit value, which means that with Max Life term insurance plans, you can get back your premium at no extra cost. So do check out all the details in the description and comment box, and let's move on to point number 2. So with that said, let us move on to the concept of retirement planning practical points. The first critical point that you must understand about retirement planning is the retirement planning math. मैं यहाँ पे Excel spreadsheet नहीं करूँगा. I will tell you in very simple back of the envelope calculation of critical points that you need to understand in order to grasp the concept of retirement. Okay, so the retirement math formula comprises of these 4 buckets. I will quickly explain it. Highly practical points, right? So the first point is that you must understand what your current lifestyle is and what is the inflation on that lifestyle. So let me give you an example. So let's say that currently you live in Delhi and your monthly expense is 1 lakh rupee. आप अच्छे घर में रहते हो, 2 BHK home, you have a family, and 1 lakh rupee में आपका काम वाम चल जाता है, right? Now, one simple choice that you can make is, and if your work permits that you're working from home, online आपका काम है, then probably you can go to some other smaller city. So होगा क्या? That maybe you will be able to cut down your expenses by 30-40%. And studies show us that you can cut your expenses. So these are some of the practical tips that you must keep in mind. So the first practical tip in terms of your retirement planning that I will give you is that if you're planning on retiring early, then always look for scope to shifting to smaller cities, because this 30-40 dip in expenses will be there, right? So this is part 1. Part 2 is that, see, your life will always be upgraded, right? That we want like better phones, better hospital facilities, better education. Kids ho jate hain, then more expenses on kids. So lifestyle inflation will always be there. So the first challenge that you will witness is that you need a very honest assessment that, okay, I'm living in Delhi and 1 lakh rupee is my kharcha. What is the realistic expectation in inflation I expect in my lifestyle where I will be happy? For example, आप जोड़ जाड़ के सब हिसाब किताब बैठा के करोगे that okay, if I have like a wife and if I have 2 kids or if I have a husband, 2 kids, then मान के चलो then my खर्चा will get doubled, right? So this is the base amount that you need to consider, and here there will be an approximation only, right? You cannot again like sit on Excel spreadsheet that okay, today the education expense is like this, after 1 year it will only grow by 10% and my rent will only grow by 10%. नहीं होती ऐसी बात, right? So this is the practical point that I am telling you. And one mitigation strategy is that always figure out early in your life and get that location independence point. Very, very critical. It can help you out a lot in terms of your retirement planning. Then comes the second point, that it is pretty much irrelevant what your current salary is. For example, your current salary could be 1 crore rupee a month, but if you invest 0% of it, or if you save 0% of it, then how much you have contributed to your early retirement or retirement planning? The short answer is 0. zero. It is almost irrelevant how much money you are making. More important factor is that how much you save and invest. So this is the second critical point. The third critical point is the rate of growth of investments. Now this is a very interesting snippet. It shows that bhai sahab, India mein that only 3.5% people invest their money in mutual funds. Most of the savings of Indians, savings means that okay, if your salary is 1 lakh rupee and you're saving 10,000 rupee, then almost 90% of Indians keep that in fixed deposit. Now this is not a rant against fixed deposit. Fixed deposits are good instruments under certain circumstances, no doubt about that. But your growth money, the money that you're looking to grow at a rate of 10% plus, that needs to be put in something called as growth assets. And FD is not a growth asset. Something like mutual fund is a growth asset. Something like real estate, good real estate is a growth asset. Something like a stock or a good stock is a good growth asset. Now, why am I calling this 10% as the baseline? There has to be some head or leg to this 10%, right? So what you need to understand is that even if you consider the official rate of inflation in India, it is somewhere around 6%. And please note that this is just official number. This is unofficial inflation will be much higher. But chalo, official se kaam karte hain, because that is a number that we can all be sure of, that inflation in India, which simply means that in 2023, you are getting an apple at 100 rupees. Then next year, most likely, the cost of that apple is going to be 106 rupees. Why? Because the price rise of apple has happened by 6%. So that is what inflation means. So inflation in India is roughly 6%. And 4% you need as a systematic withdrawal limit or systematic withdrawal plan. So how does this work out? Let me quickly explain that, right? So let's imagine that this is the year 2023. You have saved 1 crore rupee. Okay. And then you say that, you know what, my current lifestyle is such that I live in a tier 2, tier 3 city village, and inflation वगैरह भी, if I compute on my standard of living, that I will get married, have kids, all this stuff, hypothetically, then my kharcha every year or my expense every year, I'm talking on yearly basis, is roughly 4 lakh rupees. Okay. Now, as per systematic withdrawal plan, what you can do is that in 2023, you can theoretically retire. Why? And there is a condition that needs to be met here. मैं आपको मैथ समझा देता हूँ पहले. That your total corpus is 1 CR, right? Your current lifestyle plus inflation is how much? 4 lakh rupees. कि आपने मान के चलो कि roughly 4 lakh is what my SWP or systematic withdrawal plan would be. So in 2023, you retire, you stop working. In 2024, how much money you need? 4 lakh rupee, because that is the estimate that you have run. Now, what is your corpus down to? You will say that, okay, it is down to 96 lakhs because 1 crore minus 96 lakhs. But here is where point number 3 comes into the equation, that this corpus, if you have invested it properly, it will grow at a certain rate. And what is the growth rate of that corpus you need to achieve? It should minimum be 10%. Why is that? Because आप मान के चलो that in 2023 1 CR, by 2024 how much does this become? It becomes 1.1 CR. Then you withdraw 4 lakh out of it. मोटा math कर रहे हैं. Then you are left with how much? You are left with roughly 1.06 CR. Now where does this 6 lakh go? It goes to inflation. That 6% inflation हो गया. 4% is your systematic withdrawal rule. So what are the key takeaways that you must understand practically from this discussion? Number 1, have a very correct understanding of what your current lifestyle is. कितने पैसे से आप खुश होगे? Where will you live? And what is the expected amount of expenses you will incur on yearly basis? Have a very, very clear handle on that fact. So in my case, that kharcha comes out to be 2 lakh rupees. There is a video that I had done somewhere. So please go and take a look. That is the max limit. That isse kharcha nahi hota mera. So 2 lakh is what I am estimating. Then comes the second key takeaway, that you must save and invest quickly in order to get to your goal, which is based on that 4% withdrawal rule. For example, आप कहते हो that okay, I need 4 lakh rupees every month as SWP. Then how much money you need to have as the kitty or the pool? 1 CR. Okay. So that is point number 2. Point number 3 is that you must be able to grow your portfolio at minimum 10%. Why? Because there is inflation angle to it and there is 4% SWP to it. Okay, so now since we have understood the retirement math and the formula around it, now let us start getting deeper into the concept about retirement methods and what are the best assets where you could invest in order to achieve that early financial independence or retirement. So see, what people think is कि if I go and invest my money in mutual funds, so retirement jaldi mil jayega, itna to return ho hi chahta hai. Stocks mein same is the case. Acha retire, if I go and buy like 5 shops, then yes, again I'll retire very early. People retire by buying real estate also. People retire by buying stocks also, mutual funds also. The point is that whatever you are buying, that asset should be good. There is no point in buying like absolutely nonsense stocks which are going to go to zero. How will it help in retirement planning? Again, a related point here is that if we just simply go and buy dividend stocks, then our retirement is pakka. See guys, what ends up happening is that when you are buying mutual funds or stocks, the issue is that markets sometimes go up like this and then they fall like this. Now, if you are banking on the fact that every month or every year I need to withdraw 4% of my portfolio, and COVID type की situation हो जाए या 2008 type की situation हो जाए, market took 4 years to recover. That every year I need to withdraw 4% of my money. Market has corrected unfortunately 50-60%, and now you're sitting here unnecessarily withdraw karna padega and all that stuff. So it becomes a problem for you. So please understand that both mutual funds and stocks have a component called as volatility. Guaranteed regular return is not the area which is useful in mutual fund and stocks. People just imagine कि यार इतना portfolio हो जाएगा उतना portfolio, but drawdown is also quite massive. So you have to mix and match with other 3 instruments here, right? So this is very, very important that you use mutual funds and stocks for growing your portfolio. At what math? At more than 10%. Why 10%? Because I told you the math earlier that 4% is your SWP and 6% is what? 6% is inflation. So यहाँ से, right? If your average portfolio, which is a combination of this part and this part, if that portfolio needs to grow at a weighted average, please Google what weighted average means. If the weighted average return of your portfolio needs to be somewhere more than 10%, then यहाँ से आपका कितना आना चाहिए from the growth part? Well, it should at least be 12 to 15% returns here, and यहाँ से थोड़ा कम भी आ जाए, then also it's fine. Because what this part, this blue part does is that this part of your portfolio gives you stability, right? And this part of your portfolio gives you what? It gives you growth, right? Lot of people in the equity market, equity best hai, real estate wale real estate hi best hai. No, you have to mix and match in order to do retirement planning. That is the key concept that you must understand. So now let me quickly delve deeper that what are some of the best options within this space if you are planning your retirement. If you are picking mutual funds and if you know nothing, just simply go and put your money in something called as index mutual funds. Expense ratio is really low. Expense में आपका बहुत ज़्यादा पैसा नहीं जाता because the commissions that you pay to mutual fund people, it ends up eating a big part of your portfolio. Here is a tweet that I had made on that simple topic that if you're doing retirement planning, then कई बार लोग 30 साल 30 years 40 years तक retirement planning जारी रखते हैं, right? For 30 years they will invest in some mutual fund. What ends up happening if there is a difference of 2% commission, 1 to 2% commission? Well, here is the math that I explained that if you invest 25,000 rupee monthly at a CAGR of 12% for a period of 30 years, the total portfolio or corpus size is 8.82. Same math at 14% CAGR, आपने 2% commission बचा लिया, it comes out to be 14%. But we think यार 2% कमीशन तो दे रहे हैं, what's the big deal? No, please read this tweet carefully. Very, very important tweet from a retirement planning point of view. So if you are picking mutual fund and your aim is to grow your money at 12%, that is the historic CAGR of Nifty 50 or the entire Indian market, simply go and buy index fund. It has the lowest risk, no problem there, right? So this is point 1. जिस भी कंपनी का आपको अच्छा लगता है आप खरीद लो, right? Second key point that if you are going to stocks, then you should pick stocks with the intent that आपको पता है कि how to exit the stock also. Now this is something that I teach fundamentally on my member community also, so please go and check it out. You will learn a lot more nuanced techniques of investments. I keep on saying that if you're a serious investor, give it a try for 2-3 months, you yourself will see a sea change in your investing style. But stocks don't purchase unless you know the fundamentals, unless you understand the basics of stock. Stocks are wonderful if you're looking to grow your portfolio between 15 to 20% CAGR. इससे आपको बहुत gap मिल जाता है and your timeline accelerates for retirement. What about real estate, FD, bonds? So, okay, एक एक करके बात करते हैं. See, the real estate, for example, when you buy a house, you are buying it for your own consumption. A house is not an investment per se in which you are living. For example, you are seeing that I am standing and shooting a video. This house is on kiraya. I will always live on kiraya ka house, right? Why? Because I'm consuming this. But the real estate that I own, every single real estate is on commercial use or is doing some kind of commercial activity, so to say. Even the villa that I've purchased in Goa that is on Airbnb, generating somewhere around 6 to 8% yield for me. Every single shop that I own generates 6% yield. Now, why am I talking about 4%, 6% yield? बहुत simple सी बात है. See, real estate में क्या होता है? It gives you stability. For example, imagine a situation where the stock market has corrected by 50%. You require your 4 lakh of yearly expenses. What will you do? आप बोलोगे या तो you will draw down in the stock market if you're a 100% stock investor. But on the flip side, if you own some real estate, that real estate gives you cash flows, right? You might have already bought, I don't know, right, by the time you retire, you might have 4 or 5 shops. सबकी कुल मिला के rent आ रही होगी, बहुत अच्छी rent आ रही होगी. So every year you might be making 6-8 lakh rupees of rental income. A, it gives you an option to put more money in a down market, right? Because you have that stability of cash flow. B, it fulfills your requirement that why aa jayegi rent from that example point of view. Now I know that many critics will say कि यार that COVID के time पे किराएदार ने खाली भी तो कर दी थी. Agree, guys. I mean, I'm not saying that, there's a foolproof, 100% proof method out there which you will use and everything will be hunky-dory. But the point is diversification. There are some assets like these which are for stability viewpoint. So rather than having all your money or stable money in real estate, you can put some money in bonds, right? Don't do FDs, but do government bonds because the return or rate of return on government bonds is slightly higher that of FD. So that is the good part there, right? So please understand, I'm giving you all the options. You need to mix and match it. Eventual goal that you need to accomplish is very simple, that your portfolio grows at more than 10%. And that can easily happen for you. The moment that starts happening, you will have a fairly easy time. Now, let me close out the video by talking about 4 or 5 actionable points that you need to start executing in the year 2023 to accelerate your retirement planning timelines. So there are 4 action points that I will leave you with. Number 1 action point is that if you have just recently started making money or if you are already making good money but not saving much, start with the target of saving 10% of your salary. Just 10%. हो सकता है भाई आपको Netflix cancel करना पड़े, Zomato से order कम करना पड़े and all that. Please do it. Do it for your own bhalai. You will get more freedom. You will have less stress in life. Okay, so step 1 is that literally start saving 10% of your salary and every 6 months try to jump up your savings rate by another 4 to 5 percentage points. So for example, we are in October and you have just started saving money. You start out with the goal of 10%. Budgeting kar loge, it can happen. Now by like next March, April, get that number to 15%. What is the goal? Till what point you should do it? Well, ideally, right, or like, extremely good scenario would be that you end up saving 70% of your salary. I save almost 95% of whatever money I'm making. Why? Because I enjoy the flexibility and मेरा इतना lifestyle inflation है नहीं. That does not mean कि यार मैं बिल्कुल मेरे घर पे bed नहीं है या I do not drive a car. No, I do all those things. I drink like good Italian coffee and bunch of other good things I do, right? I travel abroad. But budget sensibly, that is the point. You should spend within your limits. For example, for me 2 lakh monthly expense is a lot. I can get a lot done. Now my income level might be very high, so that 2 lakh might look very high, but that is not the case. I still spend good amount of money, but despite that my savings rate is very, very high, and that is what you should focus on. Point number 2, that if you're new to investing, don't be that 90% people in that 99-1 rule. Start with index investing. If you know nothing, just simply go and do SIP in index. You are fine. There is no problem there. Commissions bhi kam hai. All good things are there. You will be able to grow your money at 12.5% CAGR. What is the average return? And you will be okay. So this is point number 2. This way you will migrate from that 90% wali bucket to that 9% bucket, right? At least आप intelligent बनोगे. And then eventually try to get into that top 1% bucket by learning about direct stock investing. Third key point, you need to bifurcate your portfolio into growth portfolio and slightly risk-free portfolio. So for that, if you understand bonds, invest in bonds. If you understand real estate, invest in real estates. Point is that you must have some stability of cash flow and buy good assets there. Then comes the final point, that have a basic sense of what that goal of money you need to have. Should it be 1 crore or 5 crore or 10 crore or 100 crore, whatever that money is, it depends on your lifestyle, what you currently have and what you expect your lifestyle to be. For example, if your goal is, yaar, abhi to I'm working in Mumbai and I'm going to earn money in India and my goal is to eventually retire in New York. So bhai, aapko bahut zyada paisa kamana padega for that. Versus if your goal is that, okay, I'm working in Mumbai, now I want to settle in this particular village in India. So aapko bahut kam paisa kamana padega, right? So I hope you got that perspective, that this math or setting that goal is something that you'll have to figure out depending on where you currently are. External comparison kar lena, that for example, if you're currently on 1 lakh rupee, are you happy with your lifestyle that you're currently living? Are you married, unmarried? What future responsibilities you might have? So as per today, do that computation. Maybe it will be like एडिशनल रिस्पॉन्सिबिलिटीज आने वाली है, डबल कर लो, राइट? So 2 lakh is your target goal on a monthly basis. This is your expense. Now run the 4% math that I had explained you, and you will have a very simple answer. What is the corpus side that you might? So on that note, I would encourage you to watch this particular video, which is around why the youth of India is getting financially bankrupt. If you watch this video, you will avoid making a lot of mistakes in your retirement planning. So please go check out this video, and I'll see you soon.